Hey traders, welcome back. So in this video, we're going to be continuing on with the overall trend exhaustion, right? And I'm going to be going over a specific entry model I love to take, right? So the way this works is we are going to be focusing on the trend. So we can see here we have a bearish trend because we see higher lows and lower lows, right? So we're seeing the market breaking structure. So how do you identify this trend reversal, right? There's a couple of things I do, and this links on to how I form a trade in the most accurate way possible. So the first thing is you want to know where to trade from. You want to have fair value gaps, essentially points of interest, right? POIs, as we refer them to. So in this video, I'm going to be going over how I find POIs, the way that I find them to be A+, right? Then we're going to be understanding what I look for inside of a POI, and then the what and the why link into an overall trend reversal. So a trend reversal or a trend exhaustion comes down to understanding what to look for and why you are looking for it inside of fair value gaps, right? One other thing, right? You want to understand a higher time frame candle. So this is the 4-hour candle's opening price. This could be 10 a.m. Eastern, it could be 9 a.m. Eastern, it could be whatever opening price that 4-hour candle will be. So if you're trading futures, for example, in the New York session, this candle, so this is going to be for ES, NQ, YM, US30, etc. That's going to be 10 a.m. EST. Now, if you're going to trade gold, for example, because we're going to be going over a gold 15-minute, 5-minute, and 1-minute case study. This is going to be the 9 a.m. EST, right? Candle opening price. So you always want to understand the 4 hours candle opening price before you put on a trade. Right, and so the last thing I want to do before we go on to the charts is you want to understand how to position yourself inside of a wick, right? So positioning yourself inside of the wick will give you an opportunity to buy the market long. And the only way you can do that is to determine a trend reversal on the 5-minute or the 1-minute over here, and then position yourself and catch this wick, right? You don't want to enter in the body. That's incorrect. You want to position yourself inside of a wick, right? So if we take this now to the charts, the first thing we're going to go over is the where, right? Where am I looking for a trade, right? So here we have a chart over here, 15-minute time frame on gold. And so when I look at this chart, I'm asking myself a few questions typically, right? I want to ask myself, where are we in terms of the weekly power of 3? So I want to know where, right? Where are we placing a trade, right? Where are we in price? So when it comes to the where, I'm looking at a few things. I want to look at the weekly PO3. I then want to look at the daily PO3, right? And then I also want to look at Asia. So these are the 3 things I'm looking for. So if we just take that to one side, what I want traders to look at now is the following thing, right? We're going to be basing this trade off a particular scenario. So if we go over here, this is now the 12th of June. What we can see is we can see a manipulative move down, and then we see a fair value gap to the upside, right? So we are typically looking for a bounce off a fair value gap, right? So let's just go over here and understand what was going on. This here is going to be our Judah swing, right? ICT Judah swing, it's the low of the day before price breaks structure. So we're typically looking for a fair value gap and a breaker structure, right? Sweeping the Asian low. This here is the bread and butter of a POI, right? What I look for a POI is the following things, right? Breaker structure and fair value gap. And so my POI is going to be something like this, right? This is my POI, and I'm going to make this very clear for people why this is essentially a POI. POI is a point of interest, an order block, a demand area, whatever you want to call it. And so the reason this is a POI, and I want traders to understand how I do this, right? We have a fair value gap, right? Technically, this is going to be the fair value gap in blue. The reason this is a fair value gap is we can see this particular candle. So the fair value gap starts here and it ends over here in line with this candle. So this is the fair value gap, and therefore this is the POI. To give us some more context or confirmation to validate this POI, we see a large amount of liquidity over here. Right, so this gives us indication. This is inducement. So inducement, simply for those who don't know that, inducement is very simply liquidity drop before a POI. So when price comes into a POI, we're looking for price to tap into the POI before potentially reversing that trend and heading higher. And we're going to be going through exactly what happens in this region, right? When price sweeps liquidity before tapping into a fair value gap, it is added confluence as to when price is going to reverse. Okay. So let's just take this over to the right and see what we have, right? So price taps into this POI coming into the next week. And so a quick tip on this, right, is if I just replay price, what we're looking for, right, is I often have my POIs marked out that are unmitigated, right? This is an unmitigated POI from the previous week, Thursday, Friday, and then the following Monday, Tuesday, we hit into this POI. And this is where we're going to be going through a trend reversal. All right, this is where we're going to go through a trend exhaustion. So Now, when it comes to the power of three, it's very simple, right? Using the weekly power of three is generally quite simple. So how does a weekly candle form, and how does any candle form, right? So what we can see over here, this kind of dashed line, you can see this is the weekly opening price. I'm just going to mark that in so people can see. This here is the weekly opening price. And so you want to ask yourself one question. If the market is below the weekly opening price, should you be buying or should you be selling? This is a question which I ask myself, and I want all the students, I want everyone to think about this. Should you be buying or selling below the weekly candle's opening price, right? So the answer is you should be selling. And this is basically how a candle forms, right? So if we just take a look at the weekly candle in a bit more detail, the way any candle will form is that the market will head lower, right? It will reverse off a particular area before heading higher. Now, of course, our job is to understand what's going on at that particular area, and we're going to go into that in more detail. But the truth is, having positioning in the market gives you a stronger indication for a trend reversal. If you're significantly below the weekly opening price, looking for sell trades or long sell, or sell trades that you want to hold isn't necessarily a good idea. So that's the first thing I wanted to go over. That's the weekly power of three. It's the same exact concept for the daily power of three. So if we just go now here to the daily power of three, to give people an indication as to what's going on, this is the daily candle. So this is the daily candle changing with each 15-minute candle. So what we have is we have Asia. So Asia opens up over here, and then we see the daily candle moving in line with the 15-minute candle. And so we have the same principle over here. This is the daily opening price. And so my settings for the PO3 are very, very simple. You want to have the daily, and you want to have the New York, use NY midnight, right? Use New York midnight's opening price. And so that's what you see over here, right? So by using the power of three, it installs a level of discipline, or it did for me, right? So when I saw price ranging inside of this fair value gap, it's ranging near the daily opening price, I wasn't happy to touch price. And so if we just take a look over here, right? People say that, yes, this is a fair value gap. Well, what about this fair value gap, right? What about this POI? This is also a POI. Well, the problem with this POI is, yes, it does give good moves. Yes, it did give a little scalp. But I personally would prefer not to be trading on the daily opening price, right? I do not want to be trading on the daily opening price. And so I use the weekly opening price, the daily opening price, or the daily power of three. And the last thing I look for is the Asia range. And so how do I use the Asia range to my advantage? So the Asia range is very, very simple. You just want to draw a line like this, right? Where the Asia range is going to be. So the Asia range I'm going to label in red. And so what does an Asia range represent? So an Asia range itself is very simple. When price takes out the Asian range low and taps into a POI, you want to be buying. You want to be bullish, right? It's that simple. So weekly power of three, daily power of three, and the Asian range give you context as to what to look for. Right, so now that we've tapped into this area, we're now going to be studying price in a lot of detail, right? We're going to be understanding how to form a trend reversal. So on the lower time frames, when it comes to identifying a trend reversal, there are a few things I want to look for, right? And I'm going to make traders understand all of them, right? So what's going on here is we're looking for a tap into a key level, right? We want to see a key level being hit, right? No level, no trade. It's that simple. No level, no trade, right? If you're not trading at a key level, you're gambling. It's that straightforward. The next thing you want to look for is you want to look for what we call an entry inside of the POI. So that's linking on to number one, but we're looking for a PO3 entry. And I'm going to explain what I mean by a PO3 entry. I'm sure a lot of people can understand what that is. And the last thing is order flow. So order flow is what kind of brings everything together nicely. So every trade you want to take, or every trade I take, comes down to the following three things. You want to have a key level to trade from, ideally a key level to target as well. You want to be entering inside of that key level with a PO3 confirmation, and then you're using order flow at the key level to validate all of your potential positions, right? That's all you're doing. So now that we have our key level, right, we've understood, just to quickly go up to the 15 minute, we've understood with our key level, we've taken out liquidity, right? So price here has swept liquidity and we're inside of a POI. So what makes a POI is simply a sweep of liquidity, and also, like we discussed, price breaking structure, leaving a fair value gap, right? So that is the basics of a POI selection. Right, so now if we go down to the 5 minute time frame, or sorry, the 1 minute time frame, we're going to be understanding what's going on, right? So everything comes down to the three checklist, or the three pillars you see over here. Key level, Now we're going to be understanding a power of 3 entry. So power of 3 again is the same for all time frames. So now we're going to hop down to the 4-hour power of 3. And it's the same exact principle. So I'm just going to kind of bring traders back to this area, right? We can see the 4-hour candles opening all the way over here, right? This is now 10 a.m. Eastern. So at 10 a.m. Eastern, we can see an expansion to the downside. So we can see the market is basically expanding lower at the point of candles opening, right? The candle opens here, we can see price expanding lower. This is exactly what we want to see, because the way any candle forms is the candle is going to open, price is going to head lower and lower and lower before we see a trend absorption and therefore exhaustion, right? So quick tip about this: if you're looking for the exhaustion of a trend, you want to be positioned correctly with the power of 3, right? So if the candle's opening price is over here, your fair value gap and therefore your trend exhaustion should be below the candle's opening price, right? And we use the PO3 to do that. So if we just kind of clear the screens up a little bit and we just head down into our zone, right? So we can see now the market tapping into our zone and then giving us a break to the upside. So what is going on inside of this break, right? This is where we use our trusted friend, right? So if I bring this over to the right-hand side, what we can see over here is we see the same price action, right? So I've not really marked this up. So this is my key level on gold. So we can see if I clear that up for people, we can see the market here is reacting off the same FVG, right? So the same fair value gap from trading view is now here on gold. And so we're going to go down to the 5-minute or the 1-minute if it lets me. Yep, we can see that over here, right? So we are now going to understand this price action here. In fact, no, does it let me? Right, sorry, here on the 5-minute, here we are. So 17th of June, right? So we are going to understand this price action. And we're going to understand the price action in line with what we see here on the 1-minute. So give me a second to put these side by side. We're going to understand this. So the importance of the ATAS platform is really to give you an understanding of what's going on over here in this region, right? So when you see a trend exhaustion, right, you've got to understand that basically aggressive sellers are failing, right? So if we just kind of tap into this area, this same exact price action over here, what you can see is you can see huge volume in terms of aggressive sellers, right? We can see that by the delta outlier. So what we see over here is we saw a huge seller, even without reading the numbers. We saw a huge seller over here, and we saw some huge selling over here, and also some huge selling over here. So if we just read some of these numbers, we saw 204 for 44. So that was around this price action over here, right? These aggressive sellers respond to the price action over here. Again, we're below the 10 a.m. Eastern candles opening price. So now we're seeing this 5-minute rejection. Notice how we have a wick rejection over here. So if we just go up to the 5-minute, right? On the 5-minute, we can very, very clearly see that wick. And so on the ATAS platform gives us that same information, right? I just want to stress it is the same information that you see in every single order flow video, right? It's the same information. And so when we look at this in some more detail, what we can understand is that even though we had a wick, there were tons of aggressive sellers within this region. In fact, we see the sellers drying out over here. So what do I mean by sellers drying out? Sellers drying out means that aggressive sellers are failing. And so if these aggressive sellers are failing, you want to ask yourself, who is in control? So the market participants that are in control are essentially the ones opposite to the aggressors, right? So here we see the aggressors, right? The sellers are being aggressive. In fact, this wick is where the trend exhaustion happened, right? Because if we just play price on again, we saw a move to the upside, and then we saw another move to the upside over here. So the ATAS platform tells us that the trend is ending. And so this is what's interesting. When you see two green candles up here like this, what's happening is the green candle had a ton of aggressive sellers. So it's showing you these sellers have not been rewarded, right? They've not been rewarded because if the sellers were successful, they would have driven price below the key level, right? But we can see a clear rejection off the level. And so when we go into this green candle over here, again, this green candle corresponds to this first breakup over here. So this was 175 for 37. So for those who don't understand how to read order flow and footprint charts, it's the simplest thing ever. What you're looking for is in this case, the bid is the left-hand number always, and the ask is the right-hand number. Now you can see a massive difference here between the bid and the ask. We see a negative delta, a red delta, which means that there's more aggressive sellers than aggressive buyers. Now let me ask you a question. If these aggressive sellers were successful, what would they have done? They would have broken below the zone, right? Or they would have driven price down, right? You see aggressive sellers in an overall upwards candle direction, right? The candle's bullish, right? The candle has gone higher with sellers. So it's showing you that these sellers aren't successful. And if sellers are not successful, this is what shows you the true kind of exhaustion of a trend, right? So the exhaustion of a bearish trend comes down to the exhaustion of sellers, and that's exactly what we see over here. So this circled region shows you the exhaustion of sellers, right? So ICT concepts obviously do work to an extent, right? This is of course a fair value gap, right? So if I label this as a fair value gap, this is a fair value gap that's below the candle's opening price, the 4-hour candle's opening price. And to give you some more context to that, we saw a huge seller in the market, which wasn't rewarded. And so this is your first trade you could have taken, right? Because we've seen the aggressive sellers failing over here, right? This is where the aggressive sellers failed. So this is here is the absorption, right? Absorption of sellers corresponds to the trend reversing, right? I'm going to repeat that. The absorption of sellers corresponds to the trend reversing. So what's happening is when you see price trending downwards, trending lower, trending lower, trending lower, when you have a bounce up like this, this bounce up typically represents the rejection of sellers, right? Sellers are failing in this region. Price leaves a fair value gap. That is your first entry. So it's very important to understand that this is happening below the candle's opening, right? Below the before the 10 a.m. candle's opening price. So that would be your first trade over there, right? So of course we can see price rallies higher, right? So that's your first kind of trade. Now, the market leaves a second fair value gap, right? This FVG over here is a second fair value gap. So how can you use order flow to confirm your fair value gaps, right? Because you already know that sellers have failed in this region, right? The trend was absorbed and exhausted at this particular region. So when we just kind of play price on a little bit, we can use order flow to confirm our trades, right? We can use order flow as a confirmation. And that's what we're going to do over here, right? So if I just kind of bring this over, when price comes into a fair value gap, how can you use order flow to your advantage, right? What is it about order flow that's special? Well, it basically tells you what's going on, right? So we can see price, again, rejecting off the fair value gap before heading higher. And now we're going to understand this over here. So we can see price heading lower, lower, lower by the candles, right? So what's interesting is when you look here, right, you can see here a very, very clean rejection. This is probably the cleanest you're going to see it. Do you see a green candle? This is on the 5-minute time frame. Do you see a green candle? What was going on inside of the wick of the green candle was the most important thing, right? When you form a trend, when you want to spot a trend exhaustion, you want to understand who is being absorbed. In this case, the sellers, the aggressive sellers are being absorbed, right? And that's what you see over here in this region, right? Look at this 47 for 0, right? 47 for 0. And so if I just bring these next to each other, let's break this down again. So we can see right at the bottom, we see 47 for 0, right? So what does this tell you about this particular fair value gap, right? So if we, if we break above this fair value gap, like we have eventually over here, price comes in and taps into this key level again. So we're seeing price reject off this key level, right? This fair value gap and this fair value gap. So this 47 for 0 is the most interesting thing you want to kind of keep your eyes on, right? 47 for 0, the aggressive sellers have failed, and then of course we break to the upside, right? Again, what's interesting is that as price is breaking higher and higher, we see the aggressive sellers popping up, right? So are these aggressive sellers being rewarded? Are they being rewarded, right? So if you see sellers in a green candle, that generally means that the aggressive sellers are not being rewarded. This means there's a passive buyer that's present. And this is what reverses trends, right? Passive buyers step into the market and they drive price higher, and you see passive buyers down here at the bottom, right? You even saw passive buyers down here. So these passive buyers are the ones responsible for propping up the market, and it's the passive buyers that cause a bearish trend to reverse, right? Nothing else. We use liquidity and fair value gaps to our advantage, but the truth is, you got to understand who is passive and who is aggressive, right? So this is how I would have framed this trade if I was trading gold myself, right? I want to be buying, again, below the candle's opening price, and you just want to target the candle's opening price, right? So that's typically how you want to be approaching this trade on the 5 minute or the 1 minute, right? So if we just kind of play price on a little bit, when you see the aggressive buyers, in this case, right, aggressive sellers failed, aggressive buyers stepped in over here, right? So this is how you frame a trade, and this is how you find a trend reversal.